We will quickly look at the post-market analysis for 28th May 2020. Disclaimer, we are just data scientists, not experts. Do your own analysis. If you want to buy or sell anything, do your own analysis. You are responsible for your own trade. Okay, so what did we do today? This is the 15-minute chart for Nifty Bank. Okay, and if you see today the market was sideways. This is what happened today. It kept oscillating between a range. So in these markets, you could have just, the market goes up, you short, the market goes down, you go long. There will not be big directional move, but how you could have gauged this? Two things. First, yesterday you see this CPR, it was very narrow. Today it is a bit broader. Okay, that is one. Second, the India VIX. This is the 15-minute chart of India VIX, and if you see in the morning it was green. Green means the market would probably respond by going down, and then the VIX kept moving down, down, down onwards. So this means what this means is the volatility from the market is dying. If the volatility is dying, a big directional move cannot happen. You need high volatility. So yesterday you see this volatility, then it came down, then again went up. So you need that kind of jerk happening for the premiums to move, give you big move. Today the premium hardly gave a 140 point move. Usually it gives a 250 to 300 point move on a high volatile day. See, second was, so we are trying to show how could we gauge if the market would be sideways. So first is the India VIX, it kept falling. That means more stability, more confidence. So the volatility is less. Second, yesterday we already got a big volatility. So today it was most likely that big moves won't come. Okay. Third, if you see in this chart, the Bollinger Band, the black one, the black shades, these are Bollinger Band. The Bollinger Band, if you see, the band is becoming narrower. The moment the band becomes narrower, that means the volatility is dying, volume is dying, and the market goes sideways. So this is the put chart for June expiry, and the put chart, if you see this, it kept moving down, the put chart. And this is the call chart. The call chart, it kept oscillating between a range. Okay, so since it is oscillating between a range, it was good to trade on the call side. We should have picked a trade on the call side. Why? Because the VIX was falling, and your day PNL was also responding in the similar manner. So it was oscillating between negative and positive. Okay, so here, what could have been a good trade? What would have been a good trade in this case was, I'm at the spot for 56,000 call, and a good trade. See, the first one, it hit here, and there's a big wick. So the big wick means there are sellers there. So it tried to go there, go up, to fill a portion of the wick, and then it rebounded. So we were on the CPR. It was, it could have been a good bet to short here or buy a put here, because your stop loss could be slightly above this point. Okay, and that would have been a good trade to cash in some points. You could have short at this point or bought a put at this point, and then waited for the fall. Second, second point was, if you have suppose not taken this portion of the trade, if you have not taken the, see, you already went up, it got short, it came down, then again you try to go up. So this, if you have missed this, then you wait for a chance to again hit this spot, and this guy hits here. The moment it hits here, you could go short, and you could have encashed this fall of the premiums. This was a good 100 point downfall, so this could be encashed. Okay. So this is on the 15-minute chart, but if you look at the 5-minute chart, I'm pretty sure you would look at furthermore possibilities. So this is what I was talking about. Since we suppose you miss this trade, then you get in one more opportunity. And at this point, normally when you are in this trade, well, what happens is you feel, hey, what if it? just breaks the resistance and goes up. It would not. There are two things. It would not. Chances are less. Why? Because the volatility, the VIX is falling. Your PNL is not supporting this ideology. Is one, and then you have a good price action here where it is trying to retest this level. Okay, it's a good price action, and this is a A plus setup. A plus setup. Why? Because you could just place the stop loss above this level, this level here, so that you know uh, you lose less if you go wrong, but you win big if you go right. So in this case, you went right, and you had an opportunity to win big. Now, at which point you could just exit. So the exit point, um, three big candles. This would be a good exit point. Why? Because we are seeing a kind of a fair value gap getting created here. So these three candles are sort of, or these four candles created a fair value gap. I would have exited here because there are opportunities or there are chances that these fair value gaps might get filled and then again the market might go down. So for me, the best trade would be I would just in cash around 60, 70 points and get out. That's one. Okay. And this is a very low risk trade, a low risk trade. Now the thing is, if you wait for the SAR, so these dots are SARs. So it's like, from here it is going up, and does the SAR comprehend that the move has gone in the opposite side? It started comprehending it at this point. Okay, so one strategy is like you hold on and you wait for the SAR to turn on the other side, and if it turns on the other side, and for how many candles it moves on it remains on the other side, you continue in that direction. But for me, uh, if I'm doing a A plus setup, I have a lot of confidence in this one. If I have a lot of confidence, I would put uh, I would go heavier. I would put more lots, and then like, in cash this. So if I'm putting more lots, for me, 50 points is a good number. Uh, I would not be too greedy, and especially in this case, when I see a fair value gap being created, I would exit at this point. So usually I am also on the lookout for stocks. So option chain stocks. The reason I'm doing that is because I want to look out for opportunities where I get a second chance. Second chance means here, does it come back to retest this level? It didn't come to retest this level. It fell short here. So I would have missed this trade because it didn't retest this level. This is on SDFC Bank. Now, if you look at Axis Bank, it did not come to retest this level. Okay, it just touched the CPR and it never came to retest this level. Okay, so but in this case, we had the second retest. It came here and then it came down and again it came here to retest this level. So this would have been a good trade for me because uh, we buy here the it was moment strikes and I put my stop loss. I would not put it just above this because if I do that, it would have been hit. I would usually put it here because I want to give it's some room, some breathing space to relax. And since uh, you know the, the market is sideways or it is range bound rather than I would say it is range bound. So I would take the risk of uh, shorting this. So if we would have short this, we could have made four approximately ₹4. So usually when we try to do intraday with these trades, we go with higher volumes, like 1,000 stocks, so that even ₹4 would earn you 4,000. Uh, Usually, good pro players they do it at least with 10,000 because uh, For such moves, 4 rupees would yield 40,000, and if you pay the brokerage and etc., you'd still earn a significant amount. But then this requires higher capital. Okay, so if you look at the option chain, and we got all of these. So what we did is we analyzed this, not for May, but we will do it for we did it for May as well as June. So if you look at June here, in this case, June is kind of the IB percentile, ATM, IB, max pain, and PCR. So the PCR is indicating that there would be uh, more puts. So that means uh, the chances of market going sideways or being on the negative side is relatively high. And so the June expiry, what it suggests is the market is consolidating and leaning slightly bearish in near term. So what strategies you can use? See, you might happen to see a more of a range bound movement. Uh, a clear directional move would be less. Okay, compared to May, June will have less direction. So if you want to go very heavy on betting outright directional bets, uh, strongly recommend not to do that. Take small profits, 30 point, 40 point profit. Do not wait for a 200-point profit because that scenario may hardly arise in the month of June. Second is there's a lack of clear direction on the price chart, and the PCR is neutral, like just slightly above one. So one means there are equal number of equal number of calls, equal number of puts, and slightly above that means the bias towards put is slightly there. That's all. It does not clearly tell you that it will be going downwards, but it is slightly there. So you have to. I mean, it's a confusing scenario. Well, again, a disclaimer, these are all for learning and analysis purpose because a lot of things goes into understanding the concepts. Do your own analysis if you are really willing to, put on a trade. It should be solely on your judgment. So, in summary, what we would do, see, if we want to do a bearish directional play, we can do it for some 30, 40 points. That is one. Uh, other is avoid strong directional buying either on the call side or the put side directional buying because the theta is not encouraging it, the theta is going down, and then there is some bearish sentiment but not overwhelming one. Okay, in today's chart, if you see, we already got a Harami pattern here. Okay, there were two Harami patterns we already found, but the moment this is a Nifty chart, and we got this tested the moment it comes back to test this, and there is a Harami formation. So usually what happens on the 15-minute candle, there is a Harami formation, and it is coming to retest. This is a good time to get in. Uh, Such candle patterns on a 15-minute chart is more reliable than a 5-minute chart. So what can happen tomorrow? See, the problem is the Bollinger has reduced in size, so it can go big bang either way. We don't know. It has went, the volatility is less when it has narrowed down, but it can go in either direction. If you look at so whenever we don't get a direction clarity, we have to go on higher time frames. Higher time frames also, you see the Bollinger has narrowed, and if we go to the 4 hours time frame, um, it is getting narrowed, but you know, um, what do we get here? So what do we understand is the candles, they are all forming wicks on the upside and the downside. So basically, there is lack of clarity on the directional move, and there are just too many candles which are. So if you see here that these candles are solid, here the candles are like solid. There is hardly one or two candles which are having that wick, but here we straight away getting one, two, three, four. So there are four candles which has wicks. Uh, it is not giving a clear direction. Uh, So where we are at this point, let's go one level up and look at the day chart. And then when we look at the day chart, so that's the level. and we are close to that level. So we'll have to see. The IV does not suggest that we would surpass this, but let's see. So that brings us to the end of this part. This was the post-market review for 28th May 2025. Do your own analysis. We are not experts, but any buy or sell call should be solely based on your own judgment. See you in the next part.